Your title, a growth company with no growth. Easy question. How do you value a growth company with no growth?
I mean, we usually use a DCF. You know, you have to look at the long term, right? So, and then you look at the earnings in the out years as well. So we look at a traditional DCF valuation, looking at the long-term growth prospects, and then we also try to normalize it, what you're pricing in. And even on our price target, I still think you're pricing in 10 million vehicles in 10 years. Long way out, but it's still quite a big number from where we are today.
You've got no growth this year, negative volume growth next year, growth the year after?
I have about 10%, a little over 10% growth in the year after. That is supposed to be when Model 2 hits. And to be honest, there's probably risk to that because we'll see how, we'll see what the potential Model 2 is. They're using what's called unboxed production, which has actually never been done before. So it's high execution risk to bring that to market.
Is this a Tesla problem or is this an electric vehicle market problem that Tesla is catching up to?
I mean, what I'm talking about is really more of a Tesla problem, to be honest. I mean, I'm pretty cautious on the auto industry in general right now. I have sells on all the Detroit 3 that I cover. But I think you're talking about a product that's a bit old. We're seeing customers just not interested in it. And what we found in our report, and one of our real top concerns why we drove the downgrade, is that the impact of the price cuts is having a smaller impact on volume. If you go first half to second half, volume went up just 3%, cut price 5%. And the pricing cuts are painful. It costs almost $7,000 in gross profit per unit lost since they started these cuts. And then, as you mentioned in the intro, you have risk to the brand. You have risk to residual values too, and that's going to cause those disgruntled customers when you come back and your vehicle's worth less. So there's been a lot of pain to do these price cuts, a lot of profit losses, and we're not actually seeing the volume. And that's why I feel like they're going to have to make a trade-off at some point and just sort of capitulate that they can't really grow deliveries with price cuts.